The earnings season is here and investors have already started factoring in the potential performance of blue chips like TCS, Infosys, Wipro, Mindtree that are to declare quarterly earnings this month. With the fear of recession looming large and macroeconomic concerns weighing, how will the IT sector fare this earnings season? Karishma Asadani joining in with more details.
All right, Shweti, the earnings season is upon us, and look who's to start is. It is the mega TCS. The IT sector has been quite under pressure since the start of this year, with Nifty IT down by more than 20%. The IT services companies will continue to, in fact, remain stressed because of macroeconomic concerns, the external factors which are well witnessed, a high retention cost, increased level cost, and sharp cross-currency headwinds. Analysts feel that among other IT players, Infosys could lead the packs and sit back large deals which will provide it with good revenue. According to ICICI Securities, TCS will see a 3.6% growth in the quarter in constant currency terms. Growth in Wipro and HCL is expected to be soft. The IT companies will in fact face margin pressure for 2 more quarters as clients may postpone spend amid global inflation. Margins are expected to improve in the second half of financial year 2023, but revenues may start taking a hit from second half of financial year 23.
All right, Karishma, leave it at that. Thanks so much for joining us with those details right there. Budget carrier Indigo will reinstate salaries of pilots and cabin crew by another 8% from 1st of August. The airline will also reinstate layover and deadhead allowances for pilots and cabin crew from 31st of July. The hike in salaries by Indigo is coming just a few days after the airline witnessed delays in its flights across the country on 2nd July and 3rd after a number of its cabin crew took leaves. Salaries have been a difficult issue for Indigo for the last few months, as other domestic airlines in India had till now reinstated salaries of their employees higher than Indigo. And Vivo remains under ED scanner in an alleged money laundering case, and Business Today TV learns from sources that the Chinese mobile company transferred nearly 62,000 crore rupees to its parent entities in China from the India unit. This was done over a period of 5 years. Our correspondent Karishma Asadani joins us now for more. Karishma, there seems to be a persistent crackdown by the agencies against companies holding links with Chinese counterparts on the basis of PMLA. What are you picking up from your sources? How much trouble is Vivo really in?
Well, right, Shweti, ED's action has been quite strong when it comes to companies that are having links with Chinese firms. In fact, Vivo has been quite under the scanner, but we're getting you this accurate information from our sources which say that Vivo India has almost transferred rupees 62,000 crore between 2017 and 2021, and this has come from ED's investigation and searches. In fact, the investigation revolves around the whole point that despite the fact that the turnover of the India firm has been about 1,25,000 crore, why was this 62,000 crore revenue gains showed as expenditure on their balances? So I'm told by my sources from Finance Ministry that Enforcement Directorate will be further investigating this, and as and when they're clear with their analysis from the documents seized through searches, they may take a step of summons, but that has to be in the long run only after they're sure of the investigation.